So good afternoon, everyone. It's great to be back at the AIM Summit. And what more could we ask for a panel where you have all complementary service providers sitting here? So before I go on talking about my panelists and ask them to introduce themselves, I'll just introduce myself. My name's Kokila. I'm founder of KARM Legal, which is a law firm specializing in the emerging tech sector. Very happy to see the progress that this whole sector has made, especially in the Middle East. And with that, let's start with our panelists. Please introducing yourself. Jason, we'll start with you.
Sure. Thank you, everyone. My name is Jason. I'm currently Chief Innovation Officer at OKX. I've been with the company for 7.5 years. And one thing that, OKX is a crypto exchange trading platform. We also have a Web3 wallet that we provide for users to self-custody their funds and access the broader world of Web3. I think you guys are familiar with how an exchange works, but what we're excited here to talk about is what some of the things that we've done on the custody side, working with some of the partners here today, especially after what has happened in the space over, I guess, in 2022.
Hi everyone, I'm Sebastian Widmann. I'm the head of strategy at Komainu. We're a regulated digital asset custody solution built by institutions for institutions. We were launched in 2018 as a joint venture between Nomura, the Japanese investment bank, Ledger, the French technology provider, and CoinShares, a leading digital asset fund manager. In 2013, now we're around 50 people. We're regulated in a number of jurisdictions, including by VARA here in Dubai, the FCA in the UK, Jersey Financial Services Commission in Jersey, as well as the OIM in Italy. We service a wide range of clients, mainly institutions and more traditional players coming to the ecosystem, but also the more established crypto-native players, as well as government services.
I am Mohideen, CEO of Laser Digital. Laser is a company actually incubated out of Nomura, which is a Japanese investment bank, primarily actually addressing digital assets and Web3. It's actually what we are trying to do is build the bridge for people from the traditional finance moving to the digital asset or crypto ecosystem, primarily focusing on, again, for institutional adoption of digital assets, whether it's bringing trust, transparency, or governance to the ecosystem, which is much needed, and also institutional type of platform. Our heavy focus is on trading, asset management, and venture capital as well, where we believe significant contribution we can make. We are based in Switzerland. We have significant presence in Dubai, now very soon in Abu Dhabi, and also in London. Recently, we've also opened up our operation in obviously our home footprint, which is in Japan. Thanks.
Good afternoon, Adriano Bertini. I'm heading strategy and product for Ledger Enterprise, which is part of Ledger. I don't know how many of you are familiar with Ledger. Okay, quite a few hands. We secure about 20% of the total crypto assets currently available. And with the enterprise, we serve institutional clients. Me personally, I have 14, 15 years in the trading side on TradeFi. Building trading platform, and I, with the team, brought to market a trading solution about 3-4 months ago called TradeLink, which is going to be part of today's topic, and hopefully what is going to bring more institutional investor into the space. Thank you.
Fantastic. So just to begin with, we talk about Custody 3.0, but as a lawyer, I think we need to start with the whole evolution which started with what we say today, Custody 1.0. So when we talk about the pre-2017 era, where we talked about self-custody, we talked about custody, which was a solution used maybe by developers, individual traders, cyberpunks. And then 2019, 2020, we started institutional grade setup for custodies. And then in 2022, with some of the scenarios we saw in the market, we see this whole setup of what we call Custody 3.0. Now, this Custody 3.0 is very interesting because now we are trying to provide a solution where any asset and protocols are supported, along with flexible signing, execution, deployment, all happening at the same time. So it's not only just keeping a custody, say, in a cold wallet, but now we have these assets trading and being monetized and yielding returns and investments as more and more institutional investors got into this space. So it would be very nice, Jason, to understand from an exchange point of view, how in OKX, the custody solution for an exchange to either do it on your own, and like we know about your partnership with Komainu, so if you could just explain how you as an exchange and Komainu as a custody solution provider got together.
Yeah, we joked prior to this that I didn't even know what Custody 3.0 is, but I think custody is obviously supremely important, especially for institutions. The risk involved and understanding those risks are paramount to running a smooth operation. And so from our perspective, we recognize how important that is. Custody is also core to what we do. We have our own custody solution that our team's been doing it for over 10 years, and we're very proud of the industry-leading setup that we have in place, and our customers agree with that. We actually, after 2022, I mentioned this earlier, 2022, yes, with the whole FTX issue and people realizing that when you park assets at a counterparty, you may not know what they're doing with it. And we recognize that, the industry actually recognized that there are tools where we can help users and institutions in particular understand that when you put money or your assets at an exchange, they need to have some assurances around what's happening there. And so proof of reserves was something that we came up with to help mitigate some of those risks, bringing transparency to and showing users, allowing them to verify themselves on chain where their assets are and what it's being used for. Today, actually, we just released our 12th consecutive monthly proof of reserves, and I think we're the first in the industry to have done that, really showing that of the billions, I think over 10 or 12 billion dollars in assets that we have, and digital assets, those are still there, right? You can go and check it on the blockchain yourself that they are sitting there in wallets that OKX controls, have not been moved or tampered with. And so when we, just to cut this a little brief, when we then think about what's next is we listen to our institutions, our customers, and they ask for, well, yes, that's good, but our regulations, our compliance teams, our frameworks require us to actually hold assets off platform. And this is where some of the cool things that we've been working with is how do we work with third-party custodians to make sure that assets are secured, but still available to be traded and accessed on platform. And that's something that I think is just coming to market. I think today we have about 1.5% or so of our assets are actually in this sort of third-party custodian setup. And I'm sure we'll get into a little bit more, but really excited about that trend and what it means for institutions going forward.
Similarly for you, Sebastian, when we talk about Komainu as a specific custody solution provider, what type of industry demand did you feel like you got from your investors? And one of the industry-specific things that I would, as a lawyer, would always want to understand, when an exchange does custody solution and trades on it, it goes to an omnibus account. It's from a legal regulatory, could be seen as a CIS sort of fund. But when a custody solution provider goes specifically in it, what are the benchmarks that you need to look
Absolutely.
at?
And that's what the way we think of Custody 1.0, 2.0, and 3.0 at Komainu is really 1.0 was back in the day when we launched Komainu with our joint venture, was really around hacking risk. So there was clear security risk and something that we wanted to mitigate back in 2018. I think Custody 2.0 evolved, given that not all custody solutions were created equal, to really focus on the regulatory aspects, operational policies, and rules that you put in place. One of these that we've done since day one is really segregation of assets on a client-by-client basis, but also segregation of assets from our own balance sheet. So all assets are never commingled, and the client can on-chain, as well as through their dashboards, really control that the assets are held in segregated wallets within our institutional vaults. We deploy as a wide set of technologies. We work very closely with Ledger to really deploy their HSM tech stack. We also have an MPC solution as well as a code solution to really be able to tailor to the need of different institutional investors. And then as I see Custody 3.0 is really how can you create utility out of the custody. Pre-FTX, custody was really just a tick in a regulatory box. So you required a regulated custodian and you deployed 10% or less of your assets with a regulated custodian. I think after FTX, custody became a must-have. And I think institutional players like Laser that are really much more mature in the space and come from the traditional ecosystem, they really understand the requirement to segregate the value chain. And that's why we're purely focusing on custody. We're not looking to go into exposing our balance sheet to any risk, but we want to create as much utility for our clients as possible, whilst enabling them to keep their assets with us for the long term, but then also earn yield through staking services, or be able to trade on venues like OKX through collateral management wallets, which is what we've announced a couple of weeks ago.
Fantastic. So, Dr. just for you, we understand that, interestingly, I was reading on your website that your vision is to combine crypto-native agility with institutional risk management practices. Now, how did you crack that whole risk, which is a very high-risk sector, to a very sophisticated investor base?
Yeah, I think for us, without which we couldn't have got our large financial backer to back us. Quite a lot of us come from decades of financial services and risk management experience. So the way we would pitch ourselves as a hybrid entity, no different to custody. Custody was one of our major projects, which I was personally involved 5 years ago, even at Komainu, because we couldn't solve, we couldn't also get our board comfortable getting into this asset class without solving the bottleneck, which is custody, right? Because for us, to succeed, you need to bring the traditional asset managers, whether it's pension fund, endowment, all the big players into the ecosystem. Retail will drive to a certain extent. Beyond that, you need institutions. How do you get institutions? You need to get them very comfortable with asset class. So typically, when you custody traditional assets, cash or equity, you have a custodian bank, you don't need to worry about it, right? So here, for us as well, the similar issue came up, that how do we both be comfortable with security and segregation of assets away from some of your affiliated activities, whether it's trading, whether it's exchange, whether it's lending. That segregation is extremely important because, first of all, it's not convenience, it's a protection of assets. Beyond that, convenience. Many convenient solutions have come through. For us, the protection of assets, without which you can't get institutions to come into the space. So only after solving that, we felt we can come into it. So we truly believe we are trying to be the bridge between the traditional finance and crypto or digital finance. The way we presented ourselves as a kind of frontier of digital finance, the reason being is that even to unlock the true potential of digital assets, you really need to allow the traditional assets, which are getting digitized, whether through RWA or tokenized assets, you need to actually have that operational bridge between that asset into crypto assets or digital finance. So the way we position ourselves is that we are some hybrid entity, basically allowing traditional asset managers, let's say they have a balanced portfolio. Suddenly, do you want to introduce 1 to 5% into digital assets? So that's sort of exposure. What is digital asset in that portfolio? Typically, the way we look at it is it's actually giving you, I would say, diversified kind of exponential exposure to an asset class which is, of course, nascent at the moment. We truly believe this is going to be the next generation. And also, we also truly believe, I don't think digital assets kind of lives on its own. It's actually, it's not autonomous. It's actually extension of the traditional asset class, more the digitized version. Suddenly the rails work, all the utility function work, and that's the way we look at it. So which is why I think custody was a key piece.
Absolutely. Custody, I think, sits at the backbone or at the center of this whole Web 3.0 or the Custody 3.0 space that we talk about, and DeFi platforms and more, the shift that we're seeing from TradFi to DeFi, custody sits in the middle of it. Now with that, Andrew, I have a very interesting question to understand the technological shift that you would have gone from this whole Custody 1.0 to Custody 3.0. What have been that sector? It must have been extremely demanding.
Yeah, so obviously our view is always from a technology perspective, and we're looking mainly on crypto security. So for us, as we were joking yesterday, what is 1, 2, and 3, like custody 1.0, 2.0, 3.0? For us, for Ledger, 1.0 has been very simple, protecting your keys. So if you use as a metaphor a safe, whoever has the copy of that key, will have access to the safe. So you can have custody of the assets, but are you sure that the keys are protected? And that's what we focus on the first iteration, and make us, have 20% of the market and the well-known brand that the market have recognized. Then we scale that for organizations, and Ledger Enterprise is the enterprise arm of Ledger, which is what Komainu currently use for crypto custody technology. And basically for Ledger Enterprise, we look at cryptographic security and we say, okay, if we have to have people interacting with funds, how can we have the same level of security with hardware enforce signatures and security around it for the interactions? Because now you don't only have one person interacting with the funds, you have multiple people, and you also have probably larger amount of funds. And when you operate with institutional level of money, you want to scale your security in that direction. And that was 1.0. 2.0 for us has been interacting with external applications, as you mentioned, DApps, also staking services. So how do we make sure that when institutions like Komainu or other institutional investor in the field want to enter staking or any contracts, they are sure what is behind that contract. They have full visibility. We use technology called clear signing that give you full clarity of what's behind the contract. So when you're signing something cryptographically, you know what you're signing. And that for me was 2.0. Now, entering the next wave, I think, as all of you have mentioned, institutional investors are looking at the traditional finance model with segregation of custody from trading. So having off-exchange technology solution, as well as continue to having the trading experience of the exchange with minimal disruption. So for me, the challenge and what we are focusing now at Ledger Enterprise is providing the same level of security at the hardware level, but now for pledging of assets, clearing, settlement, all the operations that are part of trading. And that's what basically TradeLink is about. And we brand that under secure exchange. So we've secured the keys, we've secured the interaction, and now we're securing the exchange of values. And it doesn't have to be just crypto, it could be RWA and any other digital assets that the space is interested to trade. So that's the position of Ledger there.
Fantastic. Coming back to you, Jason, now you were pretty much one of the first to get a VARA license in UAE. So what has been that adding a value to you as an exchange and a custody solution provider with it? Is there a huge upside that you see that you were already providing custody as a solution and then you got regulated? What I'm trying to get is that how important are regulations in this era of custody 3.0?
Yeah, so just to clarify, we're not the first. We're working on that, and we have the operational. We're expected to get our full market license very soon here in. But I think broadly, though, your question around regulation, how it impacts custody, yeah. I think obviously regulation is important. It sometimes can be very prescriptive, but sometimes also is a framework for best practices. We service users around the world, both institutions as well as retail. And I think for us, it's making sure all the needs of all these various stakeholders are met. And that's the balancing job that we have to do as an exchange. For institutions in particular, like we've said earlier, there are heightened requirements for custody, right? They have very specific requirements. And by working with Komainu and others, we're agnostic to, we're not in the custody business. That's not our primary business. And so we're happy to work with others to satisfy our users' needs. And so if you're a client and you come to us, say, hey, look, we want to store our assets here, we want to do it this way, we're happy to work with you and see how that could work, right? And that's literally how some of these arrangements have come about. It's customers coming to us, delivering what they need. And we work, I know we've spent hours on the legal side figuring out how to craft the framework, the contractual framework, the operational processes to make sure that these are, I think they are gold standard. I think we're going to announce some stuff in the next few weeks, but these are gold standard kind of workflows that will really drive comfort for institutions to to bring their assets and deploy into the crypto space. So we're very excited about that.
Fantastic. So when you work with regulators, in one of the sessions I was hearing before, that when you go through a process, T+2, T+1, which is the norm of a traditional finance, and then we are in a world where everything happens instantly. So as a solution provider, as a custodian, yes, security is the key element, but also how swift are you? Is it quick? Is it catering to all the regulatory requirements that you need to look at globally? How does that impact your business in this way? What I'm trying to again understand is high-level security, quick and efficiency as a custodian. How do you balance that?
Yeah, absolutely. So I think there's three elements, and also the risk we consider always are, on one side, technology risks. There's the operational risks, and then you have regulatory risks. There's always a trade-off. If you automate to maximize speed, you potentially miss, and if you have a mistake, you really increase the technology risk. So it's a mix between how operational you want to be versus how quick access to the assets or keys you have. We work very closely with our clients to understand their use cases and risk appetite as well, and how they interact with Komainu as a custody solution, and then more importantly, who they interact with external of Komainu through Komainu wallets. The standard operating model, and so in some jurisdictions also a regulatory requirement, is to have a 6-eye check internally. So that's a very manual process where we have our operational staff across the globe really reviewing transaction, understanding the source, as well as understanding the whitelisted address outbounds before automating that process. With other use cases, we're looking at increased automation. An example would be our work with exchanges, where settlement times need to move from once a day to multiple times a day to really enable scalability. And so it's really a moving target, but we always consider what are the operational and technological risk trade-offs that we're willing to commit and go after.
Interesting. And interestingly, what we would like to also know from you, Dr. Jez, is that how do you, as an asset management company and as a trader in this space, risk custody 3.0? So are there any practical benefits for custody providers like to work with you, which might accrue to such professional investors who come to you?
Yeah, there's no question about it. I mean, a lot of the professional investors, because even we did a recent survey somewhere mid-year about professional investors' appetite into this asset class to start with. It's sizable. I mean, we did a survey in 21 countries. I think nearly 5 trillion they were managing assets. So we were asking almost 90% of them felt that they want to get into this asset class, they want to diversify from their traditional portfolios, and they see this as the future and so forth. So, but what was very clear with that as well, they also want to have integrated solution with the traditional assets as well, not kind of standalone. So for us, looking at it, obviously the overall extension of this asset class and how we look as a firm, how a custody should look like for an entity like us. There's no question for asset manager, you want to have ancillary services as well. So all the way from, which we are working as well towards just beyond custody, like it was stated before, staking, then also some sort of ability to have audit trail, then escrow, potentially also insurance, and research and data as well. So things like travel rule, because otherwise it becomes fairly onerous as asset manager to manage. So if all these services can be bulked up together, and additionally also you need to add things like, because ultimately a stakeholder, asset holder needs to have the rights to governance decisions, right? And also of course consensus process as well. So all these benefits ultimately come for you to succeed. No different traditional asset classes when you're holding with your asset manager, right? When it comes to equity, dividend, and all that. So all that, I think, as a custodian, when you have all that data, together, it has significant benefit for you to grow as a hybrid asset manager.
So just on the data, since we're seeing that you're currently seen as a data consolidator, as an asset management company, we're dealing with all these different asset classes we're talking about. Do you see that also impacting your regulatory requirements? do you need to comply with a lot more of these standards globally? Are you seeing that shift now?
Yeah, definitely. I mean, for us, wherever we are regulated, for us, we only obviously operate under regulation. That's the way laser is set up, without which we can't attract real asset managers or traditional folks as well. So whichever the regulatory regime actually typically requires for you to store the data, and issues like FATF, travel rules, very clear where the asset, just not the KYC. This is beyond KYC or KYT to an extent. You need to have all the access to that data. Then also issues like staking, you need to have access to the entirety of the data, not just kind of rough data, which comes out of your obviously nodes and so forth. So there's no question part of the and then of course regimes as well where you're operating, because a lot of the regulatory regimes, even when we got regulated in VARA as well as ADGM, which we have principal license. We are also at the moment in talks with Swiss regulator. Very clear also their mandates are limited to certain jurisdictions. So we need to have that data very clearly as well, right? So as you said, MiCA is coming, so that protects, of course, your assets within the Eurozone and who you're dealing with. So absolutely, having clarity around all the data, assets, who your participants are, and they're complying with the regulator, that it hasn't come from some unknown third parties in unknown jurisdiction.
Fantastic. Adriano, for you, so Ledger in June announced the launch of its new institutional grade trading and settlement service, TradeLink. Could you elaborate a bit about that?
Sure. So as I mentioned, when I started with Ledger, I was coming from trading background. So when you've been working for 14, 15 years on something, you're trying to see the same efficiency in everywhere you are. Basically, what I joined, I see sort of like three main pillars that needed to be solved in the crypto trading. First was governance of funds during trading, and really like lack of clear visibility to the end investor, institutional trader, of what is the underlying governance, who can access the funds at any given point. The second is transparency around what are the conditions by which different players at different time can access those funds during the trading process. And third, probably the most important, is capital efficiency. So when you move assets to an exchange, the cost of capital start to increase quite quickly because you maybe have other opportunities. And if you want to rebalance assets, then is a cost, because transactions are expensive, vendor fees and on-chain fees. So we want to give a solution that solve for this problem. We want, as software provider, give a software solution, not a custody solution, and that's something that really get people confused, because we are software as a service. We provide software. That's why we work with Komainu. That's why we work with custodians. We listen to our client and solve the problem that they have, right? So we build TradeLink around the need of clients like Komainu and the end client that was trying to trade off exchange, while making sure that the access and the relationship on the assets in custody were very clear and secure by hardware. And the last point is very important, often missed. We provide a solution that is multi-custody, so we don't really get locked into one specific custody solution, and the client likes that, because they can actually access the same technology platform, the same principle, the same governance across multiple custody provider, and that is something that the institutional investor seems to like. And we think this is the direction of the market. This is where we want the market to go. We don't think every financial service provider should develop their own technology. They should leave to the technology expert dealing with the cryptography and the complexity behind securing assets and securing governance.
Absolutely. So compatibility and the market to get together, I think, has been the main force that's putting this whole crypto ecosystem, if I can openly say, working together. Now, one of the things that we noticed on this panel specifically is that all of you are either regulated or in process of getting regulated and are licensed. And most of you are licensed here in the UAE. Would it be okay for us to end this panel with saying that UAE is ahead of its curve? Or as a regulatory, what has been your experience, since most of you are licensed even elsewhere?
I'll chime in quickly. I think UAE is certainly super important, and we're very excited about what's to come here. This is going to be a very important part of the world for crypto and digital assets. That said, though, there are a lot of exciting things happening in other parts of the world too, and we're keen to see more development anywhere. But I think just on the note of custody, and I think just summarizing some points here, I think we saw what happened last year, and from our perspective, I think custody, if you're on the fence about deploying or investing into the space because of custody, I think those concerns are largely, there's a solution out there for you today as a result. Whether it's transparency, whether it's technology, whether it's legal, whether it's regulatory, all those pieces are coming together. And I think if you should grab us and talk through it. I think we can figure that out for you and pretty much assuage your fears around that. That's why I'm so excited about to see what's yet to come. I think we've solved a lot of these issues around custody in the past, that we've had in the past.
Fantastic.
Yeah, no, I would definitely echo that on two folds. On the VARA point, I think it's the purpose-built regulator really focused on virtual assets. It's really beneficial to see the conversation we're having with them in anything related to staking, whereby they really understand the underlying technology and use cases, as opposed to a number of other regulators that would try to fit staking into existing regulation, whether it's a collective investment scheme or some other form of a financial product. But I really think that also regulation is pushing for the segregation of closed ecosystems, as we're still seeing in the more retail-y crypto industry, to a more segregated, regulated parts of the value chain, as I think we've tried to allude today, with exchanges being segregated from custodians, being segregated from the tech stack, and then the clients themselves as well. So I think it's the start of a more mature market infrastructure for the adoption of more institutional players coming into the market.
Yeah, I mean, clearly from the regulation perspective, we look into that in detail. There's no question the region has taken a significant step towards this asset class and the evolution of this asset class, and it's coming through the regulation as well. So for me, the regulation alone also fairly catered around, most of the regulators are extending from the traditional regulation to include digital asset as an asset class. So here, having the flexibility, one, obviously it's done the same, whilst another regulator where he's created his own virtual asset regulation actually gives a lot of degree of freedom to further extend and innovate as well. Plus also understanding the really digital asset specific requirements for institutional clients. So I think having that degree of freedom is extremely important.
Yeah, just want to echo what Jason just said. Like, we're very excited about what we're launching now, what we're working with Komainu, with OKX. Grab us after this. We'd love to talk to you more about what we're doing. We're focused on the technology side. We're software first. Komainu is working on the operational regulatory, is the custodian. So any financial service related question, Sebastian is your man, and we're really excited to talk to you more after this.
Thank you, everybody. So we all agreed that from custody 1.0, where it was a self-custody, to a point where we are, where custody solutions are being monetized, returns are coming to investors. This is still a long way for all of us to go. Thank you.
Yeah.
Thank you.